If you're thinking about buying a home or refinancing in 2025, the question on your mind is probably the same as everyone else's. Are mortgage rates going up or down? The truth is, no one has a crystal ball. But by looking at current trends, expert forecasts, and the state of the economy, we can get a pretty clear picture of where rates are likely headed this year. In this video, I'll break down what's driving mortgage rates in 2025, what experts are predicting, and what that means for your home buying or refinancing plans. Right now, mortgage rates are still higher than what we saw just a few years ago when rates dipped below 3%. Those ultra-low rates are gone, and many buyers have had to adjust their expectations. As of early 2025, the average 30-year fixed mortgage is hovering in the mid-6% range, with some fluctuations depending on credit, down payment, and loan type. That's a big jump from pandemic lows, but lower than the peaks we saw in 2023 and 2024, when rates hit over 7.5%. The market has been volatile, and homeowners and buyers alike are asking, is relief on the way, or will rates climb again? To understand where rates are going, you need to know what drives them. Mortgage rates are influenced by several key factors. Inflation. When inflation is high, lenders demand higher rates to protect the value of their money. The Federal Reserve. The Fed doesn't set mortgage rates directly, but when they raise or cut their benchmark interest rate, it influences borrowing costs across the board. The bond market. Mortgage rates track the yield on 10-year Treasury bonds. When yields go up, mortgage rates tend to follow. Economic growth. A strong economy can push rates higher, while slower growth or recession fears can bring them down. In other words, rates are tied to the bigger picture, not just housing, but the entire economy. So, what's happening in 2025? Inflation has been cooling compared to the highs of 2022 and 2023, and the Federal Reserve has hinted at possible rate cuts if the trend continues. Many experts believe this could lead to slightly lower mortgage rates by the end of the year. However, there are no guarantees. If inflation spikes again, or if the economy heats up faster than expected, rates could hold steady or even rise. That's why some analysts are calling 2025 a transition year, not a crash in rates, but potentially a slow, gradual easing. Industry forecasts vary, but here's a snapshot. Fannie Mae projects the 30-year fixed mortgage rate will settle closer to 6% by the end of 2025. Freddie Mac is slightly more conservative, suggesting rates may stay in the low to mid 6% range for much of the year. The Mortgage Bankers Association expects rates could dip below 6% if the Fed delivers multiple rate cuts and inflation continues to ease. What does this mean for you? Rates may not plummet overnight, but we could see a more buyer-friendly environment compared to the last 2 years. If you're a buyer sitting on the sidelines waiting for the perfect rate, here's the reality. Timing the market perfectly is nearly impossible. Yes, rates might drop slightly later this year, but waiting could also mean missing out on a home you love. And if rates don't fall as much as predicted, you may find yourself paying more for the same property. The smarter strategy is to buy when you're financially ready and focus on getting the best deal available at the time. With Free Mortgage Search, you can compare multiple offers instantly to make sure you're not overpaying no matter where rates are. For current homeowners, the big question is refinancing. Should you refinance now or wait for lower rates? If your rate is significantly higher than today's averages, say 7% or above, refinancing now could still save you money. On the other hand, if you're already in the mid-6% range, you might benefit from waiting to see if rates dip further in the coming months. Free Mortgage Search makes it easy to run the numbers. You can see how much refinancing today would save you versus waiting, so you can make an informed decision. Take Tom and Erica. They bought their home in 2023 with a 7.4% interest rate. At the time, it felt like their only option. But now, with rates in the mid-sixes, refinancing could save them over $250 a month. That's $3,000 a year back in their pocket. Now imagine if rates drop another 0.5% by the end of 2025. Refinancing then could save them even more. By using Free Mortgage Search, they're able to compare options and time their moves smartly. Here's the bottom line. While no one can predict mortgage rates with 100% certainty, you don't have to sit and wait in the dark. If you're buying, focus on affordability, not chasing the lowest possible rate. If you're refinancing, run the numbers to see if refinancing now makes sense. If you're undecided, keep an eye on the market, but stay prepared with pre-approval so you can act quickly when the right opportunity comes. And remember, the best way to make sure you're getting the best deal is to compare. That's what Free Mortgage Search is here for. Are mortgage rates going up or down in 2025? Why leave it to guesswork when a broker can track the market for you and shop dozens of lenders on your behalf? That's the advantage of working with Free Mortgage Search, a trusted mortgage website with years of proven results. The platform, freemortgagesearch.com, makes it easy to compare your best options instantly with no impact on your credit. If you want to see exactly what today's rates mean for you, head to freemortgagesearch.com. Don't let the market control your future. Take control by comparing your choices today. Search smart. Search free. Subscribe for weekly videos on mortgages, real estate, and home buying tips.